Welcome back to another episode. We can see that overnight right now, a lot of the stocks are seeing some nice bullish sentiment as we get ready to open up the day on Tuesday. So we can see Nvidia right now is up roughly 1.8%. We have CoreWeave up nearly 4.7%, Supermicro up nearly 3%, and Palantir up over 2%. On today's episode, what I want to do is just take a closer look at what are some of the things that investors should expect for this week and some of the recent announcements we've seen, and also two companies that I believe might be sitting at some attractive levels. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, the main reason we see a lot of semiconductor and tech stocks up right now is we did hear over the weekend that Trump announces an extension on the EU tariffs. And this is creating a lot of bullish sentiment. We can see most of the futures are actually up right now. We can see NASDAQ is up about 1%. We can see the S&P 500 up about 1%. And like we saw at the intro of this episode, there were a lot of popular tech growth stocks that were up a nice amount. I mean, CoreWeave is holding up over 100 pretty strong. So as long as this sentiment continues through the morning, I do believe we can expect a very strong day. Now, unfortunately, right, with the overall market right now, any form of volatility, any form of announcements or negative press about recent tariffs or trade deal discussions that might not be going as strong as many expect can create negative volatility. But right now, we do see some strong movements in the space. Next, what I want to take a closer look at is here on X, there is a very popular semiconductor and AI analyst, Ray Wang, and he kind of talks a little bit about some demand that is coming out from some newsletter and kind of news report. Ray kind of copies that brokerage firms have observed that CoWoS demand is being driven by both NVIDIA and custom ASIC players. Notably, AWS T2, which is Trainium 2 at Marvell, is expected to see 371% surge in CoWoS demand this year, while Broadcom's demand is projected to grow 29% next year, largely fueled by Google's TPU V6E, which is their 6th generation TPU on the efficiency side, ramping up in Q2 of 2025, and V7P, which is kind of their Pro and performance model, starting production in 2026. So obviously this kind of showcases a few things. If you are bullish on NVIDIA, we can see that the overall demand of CoWoS is still driven by NVIDIA, but ASIC players are also pretty good. And I mean, we see some massive growth potential here for Marvell, and Marvell is reporting earnings this week and on Thursday, right, the day after NVIDIA reports earnings. So it's going to be crucial for this one to give us a little bit more picture. Year to date, the stock is down nearly 50%, sitting at $60.69. Where at one point in January of 2025, it was up to $125 from its overall 52-week high. The stock is down over 50%. Now, if we do get some great color about the Trainium 2 and Marvell, that could create some bullish sentiment, especially since if we look at the companies, I'm looking here at forward PE ratio on FinChat.io. Make sure to check out my sponsor for my sponsors deal of FinChat.io/Jose for 15% off and some weeks off. This is my favorite data platform. Make sure to check it out. But we can see in the next 12 months, forward PE ratio is 21.8. And for the year after that is 16.9. Now, this is a company that I would say is sitting at attractive levels, but it does come with some risk, right? We did hear that the Trainium 2, which is a Marvell company or product that is helping build with Amazon, is expected to grow dramatically this year. And that means a nice amount of AI revenue expected to come for Marvell. But there are two things that investors should consider with what's happening around this industry. The first thing is within this kind of Amazon Trainium, there are reports that for the Trainium 3, Marvell is losing that design win and it's actually going to go to somebody else. If it does go to somebody else, then does Marvell have some type of other hyperscale player that is going to be able to offset that revenue that is going to lose by losing the Trainium 3 and the next generation from Amazon, right? So that's going to be crucial. And any commentary by this, right? Investors need to make sure that analysts, that the management shares great information if they're losing this customer. And if they are, how are they going to be able to respond by gaining somebody else? The other thing with Marvell Technologies is they just recently announced a collaboration with NVLink Fusion with NVIDIA. This is NVIDIA's kind of allowment of using their Fabric interconnect solution. If Marvell is partnering up with NVIDIA, like we saw, what is the potential revenue mix? Is this actually something very strong that can allow them to grow more and more customers in the ASIC space? Another question Marvell investors are going to want to cover. And the next bearish take for Marvell is that the company did delay their investor day that was expected to be on June 10th, now is pushed to 2026. The company mentioned that the reason for the push was due to macro-related segments, obviously with massive tariffs and the overall uncertainty in the world right now. The company says that they don't feel comfortable giving that guidance. Now, there has been a lot of speculations that the reason for this cancellation is because the company has lost a lot of pipeline with regards to the Amazon. Now, on the bullish side, though, or kind of looking at the other side of this story, is Marvell still has an event on June 17th, which is their AI event. Usually that's where they talk about the pipeline. So I do believe earnings and June 17th are going to be two crucial events for Marvell investors. Now, if everything is looking A-okay for them and they can continue to meet and beat growth opportunities and see a lot of potential in the ASIC space, I believe that these price points are pretty low and pretty great valuations in my opinion. But again, we talked about those risks, and if those risks are true, then that is the main reason the stock has taken a hit. Personally, this is a company that I have added around $62. I've added a lot more of my shares in this company. And if it stays down, I think I'm going to be okay holding with those for earnings. After earnings, if there is a down movement, depending on what we hear, maybe I might even double down. Now, the next thing that I want to take a closer look at is we do see that Intel, there are reports that Intel, Micron, and Qualcomm all take a unite front in advising the Trump administration to create semiconductor tariffs exemption. So for those that are not familiar, the semiconductor market right now is going under this kind of national security investigation. And I do believe the main goal of this investigation is to understand the supply chain, to be able to understand how it's impacting the United States and the overall trade deals. Now, a lot of big players that do manufacture here in the United States, like Micron and Intel, are saying that, look, we are investors here, but a lot of our products go overseas, and then there's a lot of changes that happening with the product that kind of eliminate that product from being exempt. So it shows that these big players want to make sure that the current administration exempts things like semiconductor equipment, like semiconductor materials, to help overall, because if not, it could create some pressure for the consumer side. Now, this is something that I think we're going to have to keep watch, but for a lot of players to kind of be talking about it, I'm gonna guess that we are gonna see at least some answers with this semiconductor investigation pretty soon. Now, another company that we talked about Marvell earlier on, another company that I think should be kind of keeping a closer eye by investors is Qualcomm. This is one that I personally don't own. I mean, if we look at its past 5 years, this stock has pretty much been sitting at levels it saw in November of 2020. The stock is pretty much flat since then. So for almost 5 years, the stock has really not done much. Because of that, though, the company does trade at cheap valuations, right? Forward PE ratios is 12.5 for the next 12 months, and for the next year is 12.2. So this is a company that historically doesn't see much growth. And main reason, we can see those valuation metrics not really moving much. Now, one thing that I would want to say for Qualcomm, though, is right now we are getting a lot of excitement on things like augmented reality, on virtual reality, on the automotive solution, on Internet of Things, and the AI products. Now, all those products, or one of those products, could actually be the ticket for this company to see a nice amount of massive growth. Now, obviously, there is a lot of risk. One of the main risks is this company not growing much, as we've seen in the past 4 years. But if you are kind of hopeful that this company can manage in those markets, especially augmented reality and virtual reality, which they do have a lot of great partnerships with Meta and Google, which both have some pretty cool AR and VR glasses, then this is definitely a company that looks pretty cheap in a long-term tailwind, right? In the short term of things, it can continue to be a non-performer, but in the long-term tailwinds, there is some opportunity behind there. So my apologies for dropping another late video. It's been pretty difficult. I am pretty tired, and this week is not going to get any better with NVIDIA earnings. So hopefully we learned a lot in today's episode. Take care. Have a good day. And if you haven't, I'm trying to hit 75,000 subs. Make sure to hit that thumbs up and the subscribe button. Peace out.